A lot of noise.
Yeah.
It is perfect. We like to start now, next, later with a minute for the waiting room to enter the webinar for those that join us live. And we really appreciate those that join us live. So thank you always for tuning in. Today is Monday, March 17th. And we have Christy here in studio. We're going to call it in studio with Sasha for a conversation about ROI on mortgage loan production. So thank you everyone for joining. It looks like we have our attendees in the room. So Christy, thank you for being here. I figured I would let you introduce yourself quickly. And because we only have really 29 minutes, once I do my intro, we'll jump right into the tough questions. But please feel free to introduce yourself. And thank you so much for joining us.
No, thanks for having me. I love getting to hang out here with Sasha in person. Happy St. Patrick's Day for those of you that are in the festive mood, and hopefully a lot of folks have on their green. But I'm Christy Soukhamneut. I'm the Chief Lending Officer of University Federal Credit Union. I shared yesterday, I think I started in the days of mortgage where we typed in carbon paper triplicates. And we have made a little bit of progress in technology, and it's fun to get to sit here and talk about it with you guys.
Well, that is for sure. And thank you very much for being here, Sasha. Always good to see you. So Sasha, you had teed this up for me in a way that I'm really excited to dive in, which is we hear so much about cost, the cost of origination. Every time the MBA updates it, it goes out to everybody. We think about it and talk about it again. And then we do that again. And then we do it again. And it seems like the only thing that ever happens is the price keeps going up and we keep talking about it. So today we want to talk about what we actually can put our finger on, so to speak, that will lower that cost for those that want to take the steps and want to be doing it right. And you both have experience with this. So I don't know if you have anything to add to the context before we jump into the now part of now, next, later, which I teed up. Here we are. We're at rising costs. The MBA, number never goes down, but somewhere out there, lenders are doing this, lowering costs. And where is that? So Sasha, I'll let you tee it up even further.
Yeah, I think, look, I don't believe in the practice of we have to have a new topic every time we talk. And you know this because you were at Housing Wire. We had a phenomenal panel where we talked about this very subject. And when I heard Christy speaking on stage about specifically how UFCU had tackled reviewing their tech stack and looking for those opportunities to reduce waste, I thought, okay, more lenders need to hear what's the framework I follow and how can I put practices into place to actually do this and put it into action? Because it's great to talk about it, but if we don't actually take action and execute, then we're not really left with anything. And so I thought, what a perfect way to segue from that panel and bring Christy on to Now Next Later to have that deeper conversation.
Excellent. Well, yeah, thank you. So Christy, how are you looking at it? Before we get to kind of the bigger industry questions that I framed up, what perspective did you bring in to the credit union, and how are you able to attack these things methodically?
So I think that before anybody gets to talk about these things, you have to share some facts, because we're in the world of the internet where you go out and people can say anything they want and they tell you, oh, well, here's the framework or here's the thing that you should do. And you're like, well, do you really know what you're talking about? Have you actually done anything that proves that you have substance behind what you're saying? So I want to start with just a couple of data points. When I got to the credit union 18 months ago, we were in the top quartile. And by that, I mean the last quartile for how expensive it was for us to originate a loan for a variety of different reasons. We were well north of that 13,000 number that the MBA has shared. Mm-hmm. And since a year ago, where we really did a deep dive into it, we have gotten that number down to about $8,900. Our all-in year-end number for last year was $9,300. Mm-hmm. $9,800. And so it's a big difference in what we were doing and where we ended up. And we know that we still have work to do, but I hope that provides just some substance to, hey, we did do these things that we're going to talk about, and we had actual tangible results that we could report to our board.
So that, I think, leads me into my first kind of specific question then, which was, did you have to do anything to establish that baseline when you got there? Or are you seeing that either at the credit union or in general, lenders do have a consistent baseline already? This, again, in the now category, we do have a pretty consistent baseline, and it's really more about then pushing it to address the costs that go into it? Or are we still as an industry, or was the credit union still not quite there on the baseline even?
It's interesting to talk about because we certainly have the benchmark, right? MBA puts out that data. And for everybody who participates in that survey, they know where they are because they're getting that data back from MBA. Most of those folks, when you engage with them, are actively looking at this and at least understanding where they are in relation to the industry average. For folks who aren't participating, when I see them at conferences and we have conversations, they're like, yeah, we know it's around here, but not everybody has the same level of focus. And then there are certainly organizations that you probably can think of that don't know where they are. This is just not a data point that's a key metric for them. They're focused on other things, or again, this just may not be the place that they've chosen to focus. So I don't know that everybody has that number. And I also don't know that everybody evaluates it the same.
Mm-hmm. So when I was at Rocket, one of the things that we talked about a lot was this video, and I can find it and share a link in our notes to YouTube. But it was a really fascinating video of a pit crew in an auto race. And at the time, F1 was taking off thanks to Netflix and different things like that. But you can look over time, those teams have added people. Now it's a physical process, not a digital process, but they've added humans to the mix. They've given them more specific jobs around the car, and the time in the pit for the pit crew has dropped dramatically. And so you can probably see where I'm going with this. More people, faster efficiency. That's not ever what we hear in our industry, right? It's always like, oh, the first thing I look at after I establish that baseline is humans. That has to be my biggest cost. Are you finding, or did you find that assumption that everyone seems to make is the proper assumption when you're addressing costs?
Necessarily. You've got to look at what people are doing and what your ultimate goal is. Now, if your ultimate goal is to get that cost down to, whatever your number is, maybe there are humans in the loop that you have to look at and say, well, do we need this many people doing this thing? You need to look at your whole operational workflow. One of the things that we did was literally look at every single thing that we were doing and say, do we still need to be doing this thing that we're doing? How many things, I'll give you an example of when I went to a closing many years ago, when we actually went back in person before DocuSign and the partial closings, there was this attorney and he'd been in the business forever and ever. And as we would go through this closing package, he would go, yeah, so this document is here because of this law, but it changed in this period. And here's the new document. And he would put the document that we no longer needed in a stack and the document we did need in a stack. And by the time we got to the end of the closing, we had this giant stack of documents that the borrower had signed that he said legally aren't needed anymore. And then we had this stack that he's like, yeah, this is what you actually need to perfect a mortgage and have the right lien and all those disclosures and have a sellable product. So a lot of times we add on to things and we don't look at what we need to stop doing. We look at the things we need to start doing, and we don't necessarily assess what's the keep and what is the stop, particularly that stop. So how many things are we doing in our process that we don't need to be doing? And I think that's the first step that everybody's got to look at. Because if you can take a bad process and fully automate it, and you have not gotten anywhere, you have not lowered your cost, you have not reduced the number of people, the number of touches, and what have you done except make something fancy? You put lipstick on a pig.
Yeah, absolutely. And Jer and I are laughing because we literally both were at closing companies and we still understand the pain point of there being critical and non-critical docs, along with just the continued lack of complete efficiency, we'll say, in that area. We're getting far better than probably what you experienced at that closing table, but
well, that was in the 90s. So to be fair.
Well, to be fair, 4 or 5 years ago when I bought a home, I still sat at a First American office and signed papers and my head just hit the table. I was like, this is not acceptable as a mortgage technology person.
Yeah, I like that framework of start, stop, keep going. I mean, I think that's a helpful framework to say, we don't necessarily have to add anything. We can stop some things, or we've got to address what we can keep going. So maybe we could dig in a little bit on that the initial savings, as we think about stepping a little bit from now into next, but still in this kind of now phase. You mentioned touches, and that kind of piqued my interest. What ended up being maybe the top 1, 2, or 3 things that you've identified that really did start to drive those early wins that you can then build on?
Well, I think it goes from just looking at that entire process and saying, what do we want to keep? And then when we decided what we wanted to keep, we then looked at that and said, okay, what can we automate? And where can we lighten the load? Because we all know, think about your job and how you show up every day. And everybody that's watching this live and that watches it in replay, think about your job. And there's probably, let's be generous and say half of your job that you look at and you say, man, these are repetitive tasks that I wish I didn't have to do. There's 20, 30, 40% of my job that I love and that I really bring value to. So where are the pieces of the puzzle that need to happen, but you really wish were easier? And then look at how you automate those. And I think that conversation will really help your staff understand that this is not about elimination. It's about taking away things that they don't really want to do so that they can perform their highest and best functions.
And
Yes,
Jeremy, that was something that really piqued my interest when we had this conversation at Housing Wire, which was, it's not, you have to bring people along and get them comfortable to feel safe to share what they do every day so that they don't feel like they're going to be replaced. And what Christy and UFCU did so artfully was have that value-based conversation of, I want you to be happy in your role. We want you to be focused on what you do best and the value that you bring, and take some of that minutia out of the picture. So let's help do that so that you can focus on the things that you love to do and hopefully have a happier, more productive role. Meanwhile, the company is overall now starting to save money because we're automating some of that technology piece where it was a manual process, or maybe it was something that just was a step we needed to remove altogether, et cetera.
Yeah, it does. It reminds me of the way that Google, and I don't know if it's still this way, but it was about 5 years ago, working a little bit with the Google team. They have this idea of like a psychologically safe workplace. And one of the ways they establish that, they have a bunch of pillars, but one of the ways they establish is like, we're trying to address what they call toil. In our industry, it often gets called like sand in the gears or friction, but it's what you're referring to, right? There's this toil in the everyday job. And our job as leaders, and especially in the analysis we're talking about here, is to remove it, find it and remove it. One of the things I've been struggling with, Sasha, is like the delay sometimes in finding out whether you did it right. When you have like a data source, like I think of data analysis or business intelligence, you can turn it off. Literally, you can turn off a data source. And if somebody in the organization complains about it, you realize it was important, you turn it back on. It could be minutes, hours, a day at the most. With an operational production, if you tried that same approach, it might be 30, 60, or 90 days later till you found out that thing was important, thanks to post-closing and QC and all these other things. Do you have any sense, or do you have any thoughts on how, once addressed, we actually then know we've addressed the right things, especially given that lag? Or is that just part of the learning process and it's really the change cycle that we're talking about here? Do you have any sense of that?
You or me?
You can start.
Either way.
I was gonna say, I mean, I know, for me sitting in a technology company, we have tools to go look at this ahead of time and then to help you benchmark going forward so that you can look for, find, track, and then decide, did we make the right call? Is this the best way, or do we need to pivot? And I would say for at least my small slice of the pie, it's a little bit easier to look at because they are things that are being pulled kind of in real time, and you can tell where there's data waste and where there's not. Overall, in an entire loan production life cycle, I would assume it's probably a little more complicated, to your point, because you've got that longer lead time with some of those activities that it might take 60 or 90 days before you start to realize the fallout.
Or longer.
Or
In some cases, it's longer. But here's what I would say. Think about creating the right feedback loops. And you're going to learn a lot. There is no one magic silver bullet that is going to take your cost to produce from, let's just call it the industry average to the best in class. It's going to be a lot of little things. And so if you can create the right feedback and communication loops, then you can make decisions little bit by little bit that will improve it. And it will take a little bit of time. I'll give you an example from our consumer lending side. Think about collections on consumer lending, right? The cycle is a lot faster. And so we discovered that every time we made a loan, and I love this analogy that our friend Michael shared with me. So he says, imagine if every time we made a loan on a blue car, it got repossessed. How long should it be before we know that that's happening in collections till we make an underwriting decision to no longer make loans on blue cars? It should be a pretty quick cycle, right?
Yeah.
We should have a way to share that information. And the same is true on the mortgage cycle. So think about when you sell a loan to an aggregator and they audit it and they say, hey, oh, by the way, we're seeing this thing. That should immediately go back to the underwriting team. And you should figure out, is that an underwriting thing? Is that something we're doing in processing? How can we improve that process? Because the shorter cycle time we have to sell our loans and get money from that investor, the more profitable we're going to be, right? Because that impacts for an IMB, that impacts the days on their warehouse line. And it increases your repurchase risk every time they have a thing that they have to tick off and ask you for. So the cleaner you can make your files, the better your manufacturing quality, the lower your cost to produce is going to be. So how have you created those feedback loops inside your organization so that you can improve your process just one nugget of wisdom at a time?
Yeah, is there any practical things that jump to mind? I'm imagining that is called, and the way I've seen it in the past is called that sort of like monthly QC meeting, that monthly defects meeting, and somebody from operations goes and the QC team goes through each bucket, conventional, FHA, major defects, minor defects, and sort of somebody from capital markets is probably there. Is that the feedback loop we're talking about? And if not, what are some of the tools that we should be thinking about that actually create a much faster, maybe more digital or scalable feedback loop?
Well, I think that that's one of the ways that you do it. There's nothing, there is nothing like a little conversation where you learn more pieces of the process. Early in my career, one of the things that we did was we had ops come in and talk about all the defects they would see with our loan officers. Because a lot of the things start with those people on the front line. So think about our loan officers, our loan officer assistants, our processors, anybody who's interacting directly with the customer. And when our ops team would come into this meeting with the LOs, we would actually start ticking off the number of defects that we had per loan officer. And the loan officer with the most defects, we gave them a broken clock. And it said, and it literally was a clock that didn't work. And it said the broken clock award because they were wasting the most time. And the thing about this was they had to put it on their desk and leave it on their desk until the next meeting to think about the quality of what they were producing. And what was really funny about this is back in the day when we did not have digital applications, people actually came into the office. So there was a little bit of shame going on here with like, you're going to have to explain what a broken clock award is to the people coming into your office. So please do better. And one of the originators who I love dearly, like, and he was brand new and he came to my office and he said, I will give you anything if you will hold this clock during my next appointment. Because he did not want to admit, he said, I said, here's what I'll do. But I want that loan application to be perfect. If that application is not perfect, this will never happen again, right? And we started to increase the quality because we had the tough conversations with people who were making those mistakes. And so I don't know that I need fancy technology to do this. I certainly need the fancy technology, my Power BI, my Tableau, whatever it is, to surface these things. But if all I do is look at the data and don't do anything with it, what have I done? I've got to have that radically candid conversation with where something in the process needs to change, or I'm never going to actually improve anything.
Yeah, that I love it because I think it also forces you to have, I think, the conversation around like what types of work are you doing and why. What I hear as well is we had different loan officers across different types of expertise or markets or this and that. And sometimes you'll find there were loan officers working much harder loans in some cases, right? And so the more you have that conversation about what we're measuring, why we're measuring it, and how we're going to use, I like the phrase positive peer pressure in terms of like, that's what that is, right? It's like, hey, we're all actually trying to get above the mediocre here. And so we have to find ways to create a culture that goes beyond the inefficiency or the mediocre. And so it does kind of come back, Sasha, to some of these like classic, I think, truths about production. And one of them is like, what are you measuring? What do you get when you measure that? And how do you make sure that's actually part of the identity of what you've built?
Yeah, and I do think that's an area where lenders can push on vendors to help. because we do have an obligation to provide an ROI on the investment that you're making with us. And so we should have models where we can help you look at it. And it requires partnership because we don't have the lender data. We don't sit in the lender seat and see everything that's coming through and all the nuances associated, but we can at least talk about intelligently where we think there might be opportunities and give you models to test. And then again, recalibrate as you go. Did we get the results we were hoping for? If we did, great, keep going. If we didn't, then let's go back and adjust. And then to Christy's point, there are other things obviously internally that you can do with your own data, and then leverage whatever tool you want, Power BI or otherwise, to help display it. But then you got to action on it. You got to have those hard conversations to say, this is what the data is telling us. And we got to take a chance on, hopefully, if we make this action, we will get this desired outcome. And if we don't, we'll come back, we'll reconvene, we'll figure out a different way, we'll try again. But if you don't try at all, you're going to be sitting at 13,000 or more forever, right?
Yeah. So that kind of leads us to this, like, what are we trying to accomplish? I think, Christy, you put it best earlier when you said establishing goals. And if you start this process with a goal in mind, that's probably, I would say, more specific than just lowering cost. It has to be an actual goal. And then you talked through data and establishing the feedback loop. And I think part of that feedback loop, Sasha, is just what you said, which is what other tools and partners do we have to really like pour gasoline on this progress? And so I guess that's my question. What is the way that you, as with your experience as an industry leader, what's the proper way to think about expectations in this category when it sounds to me like what we're describing is a constant process that is not that different than diet and exercise, right? Like, we know we're supposed to, we know the factors that go into it, what I eat versus how much I move around the world, in order to address some of these key indicators. So really what we're selling to lenders here is, sorry, and I mean this in a good way, sorry, it's never ending. Like, this is resetting the goals each and every time, and it's a discipline that happens month over month, quarter over quarter. What can I say to my team? What should I be thinking, especially as a lender, is a proper expectation to celebrate along that way? How have you thought about it? How do you advise people? Maybe how did it happen for you?
Things that we did, and I'm a big proponent of celebrating the small wins, because if you're thinking about climbing a mountain and you wait till you get to the top, then it's like, oh my gosh, there's the next thing that we have to do and the next thing. So when do you create those opportunities to celebrate with the team? And when do you remind them, like, hey, this is where we've gotten, right? We still have a ways to go in our journey to be at the number that we want to be at and deliver what we want to our members. So being a credit union, our focus is on lowering that cost so that we can empower our members to, be more financially successful. We're partners with them. I look at that and I don't like the term vendor. I like the term partner, because part of the way that we got here is we looked at each of our tech contracts and we looked at our tech stack and we said, not only now that we know what we want to automate, what we want our process to look like, we did the value mapping exercise, which is, where in your journey are you creating value and where is there waste that you can eliminate, right? So then we went and looked at our tech partners and said, who do we have that's a partner today that maybe we're not using all of their stuff? Maybe we can improve what we're doing. Maybe they have new stuff that we don't know about, but they've been really good partners, and creating those relationships that go deeper than just a single, hey, I had a pain point today and you solved it. When you look at it like that and you can get to a point where you're comfortable sharing your data, your partners can bring in so much because they see best practices in other shops. And many of those companies are willing to share and willing to pass that along. There's not a lot of super secret stuff that we do in the mortgage space. Originating a loan is pretty similar from one thing to the next thing to the next thing. So no real corporate espionage going on to share some of the best practices from place to place. So work with your vendor partners. Make sure that you're building those kind of relationships so that you are able to deliver better for your clients.
So Sasha, that brings up a question that I want to throw to you, which is more in this later category that we like to bring up, that we usually try to end on, which is, can we capitalize on some practices or intel that allow us to take our business sort of to the next level. And I think to Christy's point is really well made, which is I want to do it before. I realize everybody's going to go there because this is a consistent process and we do all have access to very similar knowledge about how to optimize that consistent process. And it sounds like what we're saying is a change for a lot of people culturally, as well as maybe in some other ways, about working more holistically. That is both internally for that feedback loop, but also with your partners. And so I think there's a lot of jockeying that goes on within the partner world for what combination and who, what, where. And then it does introduce some, I think, risk and uncertainty where people are like, well, weren't they just working with them the other day? And like, do you have any thoughts on where we take it from here to really establish those connections, those relationships, and maybe even some new type of partnership that does take this to the next level more quickly?
Absolutely. You know, there's examples that exist today, and I think we need to just continue to lean into them. We happen to be at one of them. The Mortgage Collaborative is hosting their event right now. Lenders One is another cooperative that has events. There are organizations out there like CHLA, even MBA, that host events and have different committees that you can sit on where you can bring this type of solution forward and say, hey, I want an opportunity to sit down with my other industry peers and think about how we're going to set some type of standards or ideas that we can share with each other. And to Christy's point earlier, I think it's never going to be the same shape or size for every lender for a variety of reasons, but you can at least take maybe 50, 60, 70% or more back into your own shop and then figure out how to make it work for you. And what I love about industry events is you are in the same room as your peers. You have an opportunity to have those collaborative conversations and figure out what worked for one and what might work for you. It's a matter of saying, let's have those conversations. And I would also say, don't be shy to tell your partners that host these types of events, hey, what would really help me is a session where we practically sit down and whiteboard what's worked to lower loan production costs when I evaluate my tech stack or when I evaluate the processes that we have and whether some are broken and I might need to fix it, or where I might want to evaluate roles and where there's minutia, where do I start? Or I think somebody asked earlier in the chat, how do I have that conversation about toil in a way that is value-based and gets people, you know, more bought into rather than feeling like, oh, I got to protect and I can't share information. So I think all the right bodies exist to have those conversations. We just have to bring the ecosystem closer together and have change agents like Christy that are willing to share and be so open. The other, you know, thing that we do, and I know many other partners in the industry do as well, is we're having a client advisory board. And sometimes having those smaller group sessions is nice because people feel a little safer to open up in a smaller group. They know what's hosted there is going to be held confidential. And it's an opportunity, again, to share those experiences and maybe soundboard off of each other. In my mind, my hope is one day, if we do this properly, we start to get to industry ideas and insights that can be replicated in different shops, and that we do tighten that a little bit more. So I think, like I said, all the right forums are there. It's just a matter of being more efficient and effective in how we come together as an ecosystem to work on these things.
I challenge folks to ask better questions.
Yeah.
Right. Show up with the questions and show up with curiosity, because a lot of times we show up with bias of we know the answer. And I got to tell you, I learn over and over again that I don't have the answers. What I have is a lot of curiosity about trying to get to what is in this case later. You know, what is where we're going to be. And if you're not starting with some good, curious questions and a really open mind, you're never going to make the kind of improvements that you hope to make.
Yeah, that resonates with me. I joined this industry, so I only know what I know, right? I joined after the global financial crisis, and so I know what I know, which is 2010 on. But I was often accused of, Sasha, being like the millennial in the room because I was always wanting to share. I was like, let's share, let's find out, let me call some people, let's network, let's connect. And it took longer than I thought to get here, but a lot of what you said in there is that's actually the way we move forward. We're not afraid to, because this is a limited amount of time with limited resources to do a pretty consistent thing that we're all trying to do. and then let competition shake out. And so that is very reassuring. And a lot of these steps are the ones that we just need to rely on because we hear them, we hear the best practices, and we just need to trust them.
Exactly. And I think people get worried about the competitive side. And the truth is, we all know there are all sorts, again, of shapes and sizes of consumers. And what you do to have a competitive edge is your relationship building and what you offer them and meeting them where they're at and providing them with the product they need at the right time. And so you're going to go do that no matter what. Sharing some stuff underneath the kimono around how you can just operationally be better is not going to more or less change the competitive nature. Like, okay, fine, you might be more profitable and you might make somebody else more profitable, but we should all rise together and then let, to your point, the competition play out where it really does, which is in the relationship building.
Oh, that was really good. Like, that's really good.
It's true.
Really good.
Right?
That is a wonderful conclusion. We are going to ask better questions. We are going to stay curious, which is a theme here on Now, Next, Later. So Christy, thank you so much for joining us on this conversation and adding your perspective and those examples of actually accomplishing the thing we're all setting out to do. So this will be available on YouTube. And Sasha, thank you. We'll be back next week.
Sounds great. Good to see you, Jer.
Thank you. You too. Thank you, everyone, for watching, and we'll talk to you again soon.